So most Americans, we're getting towards the end of the year and you're looking for ways to save on your year-end taxes. And this is where in comes year-end gifting strategies. Many of you may give charitably to causes you believe in, to children, whatever. And I want to talk to you about some savvy ways to consider some year-end gifting that could save you big come tax time. Keep it right here. Good day, everybody. Chris Herline here of REAP Financial, host of Retire Ready TV. That's on KXAN every week here, News Channel 36 in Austin. Be sure and hit the subscribe button if you like our channel. Click the bell for notifications. I drop new content every week on this channel. Today, I want to talk to you about some year-end gifting strategies, some unique ways to gift that can save you money, not only in income taxes, but also in tax deductions, charitable deductions. I want to make sure you keep it right here today because I'm going to dive into some little known strategies, so stay with me to the end. So if you're going to plan on gifting this year, there's ways that you can give cash gifts and there's non-cash gifts. And non-cash gifts may be a really savvy way to give because it could save you money in capital gains. A lot of people, they sell stocks in their portfolio. The market's been good here in 2024. You sell stocks, you create a capital gain, you put that money in the bank, and then you give to charities maybe at the end of the year or throughout the year. Well, keep in mind that charities can accept non-cash gifts. So if you have highly appreciated stock, highly appreciated mutual funds, highly appreciated ETFs, whatever you hold in your investment portfolio, let's say in a brokerage account, you can donate those securities to charities, multiple charities if you want, and you don't have to exercise that capital event. It won't hit your tax return as a capital gain. You can give those highly appreciated securities to the charity of your choice and make a real impact. Another thing to consider is what I call a donor advised fund. Many of our successful clients that have charitable intent, they utilize donor advised funds. And I want you to think about it like a charitable savings account. It's an account that you can donate cash to. It's a donate stocks to, just kind of like I was mentioning. And these stocks can be donated in any amount. And there's no limitations on how much you can give to this donor advised fund. Once the gift is given to this fund, the cash gift, the security gift is placed in this fund. It can remain invested, or you can invest it in many different things that you choose, and that money can continue to grow. So in this strategy, you're not necessarily giving the money directly to a charity, you're giving it to a charitable savings account that's in your name. Okay, now once the money has been given, it's irrevocable. That money can never be used by you again, but you don't have to relinquish the funds. So here's an example. If you give, let's say, $10,000 a year to a charity, and let's say you have a large taxable event this year where you're trying to get a reduction in your tax bill, maybe you did a Roth conversion, maybe you had to exercise company stock, you've got a big gain you're trying to reduce. Well, this is where you could say, I give $10,000 a year away to charities. Maybe I'll do 3-4 years of my gifting in this single year to my donor advised fund. So let's say you took $40,000 of cash, donate it to your donor advised fund. Well, you get to take the large tax deduction this year against maybe what is a taxable event or a large tax bill. And that can help you drastically reduce your tax bill without having to give large sums in one year. Now, once that money's in there, it's seasoning, it's cooking, you can give that money away to any charity of your choice over many years to come. You can even leave it to your heirs and let them give charitably if that's a value for you. So many of you may have questions around these strategies. Listen, I suggest you put your questions in the comment section below and I will address those in future weeks' episodes. Another powerful strategy is what's called a qualified charitable distribution, a QCD. So if you're over 70 and a half, and let's say you got money in IRAs, you can give directly from your IRA. And when you give directly to a charity or multiple charities of your choice, that counts as a charitable gift and it reduces the amount that you're required to take on the year. So here's a great example. Let's say you have a $20,000 required minimum distribution. That's the money you have to take out. That's all going to be taxable because it's pre-tax money. You've never paid tax on it, so now it's time to pay Uncle Sam. But let's say you give $10,000 to a charity of your choice. The RMD's 20. $20,000 has been taken out. $10,000 went to the charity, $10,000 came to you. That satisfies your $20,000 on the year. What a lot of people do mistakenly is they take the full required distribution, the full $20,000 shows up on their tax return as income, and then they give charitably throughout the year. So if you give charitably at all, the first dollars that you should be giving are from your qualified charitable distribution, because that income will be outside of your Schedule A. It's better than a charitable deduction. Keep in mind, you can give up to $105,000 a year to these qualified charitable distributions. That's quite a bit of money. Most retirees aren't given that much, but there is a lot of headroom, okay? Another thing to consider is converting a portion of your IRA assets potentially into Roth IRAs. This can give you the benefit of tax-free growth forever. This allows you to leave money to your heirs tax-free. For those that like the idea of gifting to kids during the year, what a powerful way than other to do it tax-free in a Roth IRA. The power of Roth is it grows for you tax-free. There's no required minimum distribution on it ever. And like I mentioned, you can leave the money to your heirs tax-free. Listen, I want you to click this next video to learn more about tax-free gifting.